Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got my good friend Ewan Downey from I80 Gold on. Gold has been on a pretty good tear for the last week, and I80 Gold has a pretty special group of projects. So I thought I'd get Ewan on to talk about gold and talk about what's going on at your company. How you doing, Ewan?
I'm doing well. The gold price sure had a good week last week. I think it's had a great year. The last year has been really good for gold. It's just the narrative hasn't been shifted in our direction. It's more being shifted in the direction of AI and in the US, and hasn't really been a lot of interest in the whole mining space, never mind just gold, for about 18 months now. But hopefully this increase in price that we saw happen last week with all-time highs having been hit, hopefully this will bring some of that narrative back to our sector. And we are such a small sector that you get that generalist interest, and it could gap substantially higher than where it landed on Friday.
You must be reading my reports, because that's exactly what I've been talking about, you. And I was at the PDAC, and I can't remember the last time that there was that much enthusiasm. All the aisles were full. You had to zigzag your way through. The companies had tons of people talking to them at the booth. There was a definite buzz that you could feel because of the action on Friday and then Monday, Tuesday. It was pretty remarkable.
Yeah, but I still think that still hasn't translated into the share prices. I think for the most part, gold and mining stocks were trading at higher levels than they are today when gold broke 2,000. And now here we saw it briefly break over 2,200. Another 10% gain in the price of gold, and the stocks are just starting to move, and there's probably a lot of selling coming into it. So I think we're on the cusp of there being a significant change, and hopefully this week shows that. But I still don't think we see that euphoria of jumping into gold stocks as yet. But it will come with the price, with the gold price increase. We should see that narrative shift.
Well, my thesis is that, first you got to stop going down, and then you got to start improving. And I noticed that we seem to have made a good move, low on the Newmonts of the world. It's the worst performer of the major. Barrick's has come up nicely. Agnico Eagle is probably the best relative strength performer of the big gold stocks. Then you got the GDX, looks to it like it's bottoming. And I just wrote a report earlier today, and I used I80 Gold as an example, because you also bottomed just before the PDAC, and the stock's up about 40 cents. That's about a 20% move in a matter of about 4 or 5 days. And McEwen Mining has done a similar thing, 25%. So I'm starting to see it filter down from the biggest to the smaller, well, not majors, let's say. And I think it's not going to be long before we start to see some fear of missing out action in the gold stock, because they're so compressed right now, Ewan.
Yeah, definitely very, very compressed. There's a lot of small companies. Guys are joining us at Ruby Hill, and some of their stocks are down in 1, 2, 3 cents. It's crazy what's happened to the explorers and the developers over the last year. But as we've seen before in our sector, the narrative shifts, and it can go significantly higher in a real hurry. And what I think was particularly encouraging was on Friday was the first time in probably at least a year that I've seen CNBC, a session on CNBC actually promoting gold, which was great to see. And when we start to see the mainstream media catch on, that's when things really go. And I think if you look at that session that they had, you know, a lot of good points were there. The U.S. You've been ahead of this curve for the last year. You've been talking about this death spiral of debt, and you know the U.S. has 34 trillion in debt right now. The debt to GDP is more than 120%. Like that's not the hallmarks of a country, and it's a world's reserve currency that has its fiscal house in order.
It's almost twice as bad as Mexico. Mexico right now has 0.65 debt to GDP. That's Mexico, not the United States.
No, it's you know, fiat currencies are under pressure, and I think the you know, the Eastern Bloc nations, China, etc., they're getting rid of the U.S. treasuries and they're just buying gold and buying gold. And record for 2 years we've seen central banks buying in a row, and I think we'll see in 2024 another record because they're, you know, other central banks are realizing that, you know, they're not doing a great job across the globe, these governments. You can't just keep going into debt and ignore it. And every few months we hear of the debt ceiling being raised, and that can't go on forever. Something's got to shift. So I think we're there. And what happens when the Fed pivots and starts to say, you know, now we're going to be bringing down interest rates instead of hiking? I think gold goes 25, 2,700 and in a real hurry. And that's when we'll really see big moves in mining stocks.
I think we're there. I think we're starting that big interest. And when it comes to generalist investors, momentum players getting into the gold space, a lot of those are Americans. And I think that's why you and McEwen Mining, who both have listings on the US exchanges, are some of the smaller, less than the majors, that are actually showing some relative strength from the bottoms that you guys hit recently. They've come up pop pretty nicely.
Yeah, but still, like, we've got quite a bit of catch up to where we were just a month or so ago. We were at 240. So I still think there's a lot of catch up to do, and it's going to come. And it's probably first is going to see there's going to be money flows into sort of the ETFs. So if you're on an index, I think those will be the first stocks to move. And then we'll see more people just picking and buying their shares. And hopefully the gold funds, who have seen significant redemptions over the last 2 years and have really shrunk in size, hopefully we see people starting to say, well, which gold fund should I be investing in? And they see increases in their balance sheets. It'll allow them to play in the market.
You guys are in some of those ETFs.
Yeah, we're in 2 or 3 indexes right now, including the Russell in the US, which, if that starts to see a significant change in gold, that's one of the benefits from the US listing is we could see some really strong increases in our volume through these type of indexes. So I'm looking forward to more and more people realizing that, you know, the gold price didn't go down this time. It continues to go up. It's following Bitcoin now. And yeah, that narrative shift is I think we're right on the cusp of it, and we're going to be pretty happy about our sector, hopefully over the next 6 months, and say, wow, that's why we buy this sector.
Maybe 6 days.
Yeah, let's hope. Yeah.
Now, Ewan, lately I've been writing, and I've kind of been putting companies into buckets, if you will. I've got my explorers that I've been following for a long time, and then I got a group of newish picks that I picked over the last couple months. And then I got a handful of companies that I call special situation companies. And I put I-80 Gold in that category. And why I put it in that category is because of your growth profile. You're a small miner now, but you have a growth profile that could make you into almost a mid-tier producer coming from a really low base of production.
Yeah, I'd say the comparables on our growth trajectory is, you know, we are underground on 2 projects right now. We're doing the work required to get full feasibility studies completed on those. We should be permitted to go underground at Ruby Hill here in the first half of this year, kind of mid-year. We're expecting to have that final permit. And at that point, we'll have the 3 development projects underway. And with the growth that we expect to see through the development of these 3 projects, our production profile will see us grow to 400,000 to 500,000 ounces a year. And that's pretty substantial, because the comparable companies to what we are building right now are companies like Lundin Gold and Alamos Gold. And, you know, these 500,000 ounce a year producers, that have good grades, especially with good grades in their deposits, have market caps between 2.5 and 5 billion, 2.5 to 5 billion US market cap. Our market cap, we closed out last week at less than $500 million US. So I think we have a long way to go in this move, and that's what our aspirations are, to be in a couple of years when people are talking about who's the best mid-tier producer. They'll be talking about Lundin Gold, Alamos Gold, and I-80 Gold. And we aren't in Turkey. We aren't in Ecuador. We're in Nevada, USA, which is ranked #1 in the world. And I sent you an image just before we started of the autoclave facility. And I think that's what really sets us apart, is the fact that we have permitted mine sites, and these mine sites have existing infrastructure. And some of the stories you hear around the world, that have caught a lot of attention, like Rupert and Snowline, is when do you think those companies are going to have permits to actually build their operations? And then what is the capital cost on those going to be? Artemis is constructing a mine that's, it's $1 billion construction project. We expect to build 3 mines for about half of that. And I think that's the real competitive advantage we have, is the fact that we've been able to assemble this portfolio of projects that not only are permitted, but also have existing infrastructure. So it's not a long lead time waiting to see if the government's going to allow it. It's conversion of these plants to suit our needs.
Something like Snowline still has to go through that long development discount window that could be well past 10 years. You guys can make that into a year or two. And it's certainly not lost on me, Ewan, that you have pointed out in the past in our interviews about how the transition is happening in Nevada from oxide deposits that have to go down underneath and get into the sulfides, and just the lack of facilities to process that material. And you have one, and that's a huge competitive advantage, especially in Nevada.
Yeah, in Nevada, most good mines or good deposits, as you go deeper and deeper, transition from, as you said, oxide into refractory or sulfide gold mineralization. So the inability to process refractory ore is really a barrier to entry into the state. And in terms of autoclaves, only us and Barrick, or Nevada Gold Mines, have an autoclave in the US, all of the US, not just Nevada. So that's something that really sets us apart. It will allow us to be a producer in the state long past when other companies exhaust their oxide and no way to or don't have a sulfide deposit. The company won't be in the state anymore. And that's one place where I think we really stand out. And the market really hasn't been paying enough attention to that in us, if you ask me. And then we have our base metal deposits, and the Blackjack FAD, the grades at FAD are incredible. The Hilltop discoveries we made are some of the highest grade polymetallic base metal deposits in the world. And that's on a permitted mine site. So we can advance that project quickly, which we are doing. And we are going to use the infrastructure that we have at Ruby Hill. And really that's kind of what I wanted to get across in our interview today, was that we have grade, we have facilities, we have permits, and we have a gold price that's starting to play in our favor.
And before I let you go, Ewan, I had a great chat with Tyler Hill at the PDAC. I was very impressed. This is a young guy that we need in this business, really smart geologist. And I just happened to get him put the microphone in front of his face when just after you had released the results from McCoy Cove. I mean, almost an ounce per ton over 20, 30 meters. And this is not isolated with McCoy Cove. You guys keep putting results out after result after result from McCoy Cove. And that's just another of 3 projects that you're simultaneously drilling off, drilling to expand, and developing simultaneously with the processing facility.
Yeah, I think we've created a really unique situation. And in 2023, we saw our share price effectively get cut in half during the year. I think a lot of the developers, a lot of the explorers did. So we weren't the only one, but we did underperform, and that's really, I think, a function of the fact that as a developer, we are at a point in our life cycle, so to speak, where we're in need of significant capital. And as you know, this market is being starved for investors putting money into mining. So companies like ours, who are developing 3 projects at once, which is a pretty tall task to take on, are companies who we had a lot of success at acquiring and defining these deposits, and had a lot of success in discovering new ones, new very high grade deposits. But the market turned against us during 2023 because of our perceived need for significant capital, and which is, a fair point, but it doesn't take away from the fact that in all categories, we have more than 14.5 million ounces of gold in Nevada, over 180 million ounces of silver, and the processing infrastructure. So we are quite different from most companies, developing 3 projects, not just one, and doing it all at once. But I'm very confident that this strategy will be very profitable for us as shareholders. As you know, I'm a pretty major shareholder, as we go forward. And really, we've been waiting for some attention to come back on our sector, and I hope last week was just the start of something really special for the mining companies.
It's here, Ewan. It's coming, man. All right. Okay. Well, thanks a lot for you and for spending some time with me on Sunday. I see the sun's out there. Enjoy the rest of your day, and we'll talk soon.
Okay, sounds good. All the best. Thanks.
Right. Take care.
You too.